Good morning, everybody. Coffee at 10 with Glenn. I'm here again this week with Mr. Craig Whaley.
Good morning, everybody.
We're doing a little regular finance thing we figured every Friday. Craig and I have spoken about some interesting developments, things that are happening with regards to finance, refinancing, structuring, what's happening with first home buyers. But firstly, something that hit me this morning, I was watching, I think, on the ABC breakfast show, talking about the position Australia is in financially. And overall, given the virus, given where we are doing incredibly well. They're saying that we've got more countries, companies and financial institutions willing to offer money to Australia because we are seen as such a good risk globally. And that's amazing, Craig.
Yeah, absolutely. Our credit rating's up there with the best in the world. We're still strongly dealing with the COVID virus. We've still got the economic fundamentals that were brilliant going into COVID. A lot of people have got to remember that if you look at our economic fundamentals, our overall debt as a nation coming into COVID, we were doing really, really well. So even at the end of this, it's not all doom and gloom. We will have higher debt. We will have to pay it back at some point. Interest rates are lower to pay it back on, but it's not as doom and gloom as many people make it out to be. So the banks are out there, they're trying to lend as much as possible. Criteria has got a lot harder, but there are so many great offers out there at the moment to really help borrowers and to really help stimulate the economy at the moment as well.
It's such good news, and I listened to it and I thought, wow, we are really lucky. We are in the lucky country. And interest rates are so low globally, so it's not just in Australia. So we're borrowing money at less than 1% on a global basis.
Yeah, correct. We're borrowing money at 0.25%, so the cash rate is 0.25%. So basically as low as it can go, without going into negative interest rates. We're at the lowest it can go, which is an interesting dynamic when borrowers are looking for the best course of action for their own borrowing. So, for example, at the moment, the interest rates will be hard pressed to go down even more, virtually impossible. So we look at what does the current environment tell us. The current environment tells us that a fixed rate is more beneficial than a variable rate if looking for lower interest rates, less mortgage payments to be made. Fixed rates have the advantage over variable rates. So I'll give you a quick example.
Yep.
3-year fixed rate at the moment, 2.29%.
Wow.
On an owner-occupier, so 2.29%.
Wow.
It goes back to when I bought my first property at 18.5%. Is a bit of a
Mine
difference
too.
there.
Yeah. It was about 17.5% my first property. So yeah.
When you look at, say, the variable rates getting down to about 2.59 as the low rate. So fixed rates as a general rule, but then you've got to be careful. Which one of those products, which one of those bank sort of processes allows you to have an offset account with your loan, and not being sort of caught up in what you don't need. So what is it you need? What is the best rate of interest you can get? And then finding that and getting the advantage from it.
Very good. I find that so exciting, really, for a buyer. Okay, two other areas we wanted to talk about was refinancing. So if you've already got a property, you're a homeowner or an investor and have investment properties, it's a really smart time to be talking to someone like yourself, working out if you can refinance, get your repayments down, or repay the same as you're paying now, but obtain more equity in your property.
Yeah, absolutely correct. Really good points you raised there. It's interesting. Banks are offering cashbacks, so between $2,000 to $2,500.
Hang on, cashbacks. A bank is offering cashback. I've never heard of this. What's that mean?
It's relatively new. So basically, what they're doing is they're offering a stimulus of a $2,000 to $2,500 cashback offer when you refinance. Got to be a little bit careful. You've got to make sure you do your homework, and that's what I do as a broker, because some of those may be on products that aren't the best for you. So you've got to be really, really careful, but there are many, many good options out there where you can get a cashback paid back to you, say, at $2,000 for the refinance. But you've got to look at it a bit like when you're negative gearing and looking at tax benefits as an auxiliary benefit to capital growth. Mm-hmm. If you look at an investment and you look at purely the tax benefits as your primary benefit, you go wrong. It's a bit like when you look at getting a loan. If you're being offered $2,000, but it's going to cost you $3,500 to get the $2,000, obviously common sense dictates
it was a waste of time.
You don't do it. So being able to decipher, the two components. Is it in your best interest? How much interest can you save? What are the overall benefits for the product? And then, can you get back to $2,000 to $2,500 as well? Yep.
Big point here. Talk to a broker. Talk to someone who understands. This is why I personally like brokers. They're not selling you a product that belongs to their company. And I'm talking about the banks predominantly here. But you're independent, so you've got a range of finance companies and banks you deal with, and you'll look for the best product for your client.
Absolutely, really good point you raised there. We have 37 different banks we utilise, Australian banks, foreign banks, we have credit unions, we have small lenders, we have different criteria that the lenders use. So the great thing and what I enjoy most about what I do, almost 30 years now in my profession, is the fact that, as you quite rightly point out, we're not selling our own product. We have to do the right thing by the client. That's absolutely critical, and we can play the banks off against each other. So the choices which come about, is very rewarding for client situations.
Brilliant. Okay, last point I wanted to talk about: first home buyers, new home buyers. First home buyers, people buying for the first time a property, buying a second-hand property. There's some really big advantages even there now. And we saw one through our office just recently that I'll, quite briefly, first home buyer bought a renovator. Young couple, they bought a fabulous old Queenslander that had been partly renovated but needed more than $125,000 worth of work done on it. They're going to spend. They got it at an absolute bargain, I feel, and now they've got a swathe of grants from the government totaling probably better than $50,000 in total. So Craig, let's just run through a couple of these. You've got, from the federal government, there's a $25,000 available if it's over $125,000 worth of renovations. Is that correct?
Yeah, renovations, yep. Yeah, or a new property up to $750,000 value.
Yep, there you go. Yep. You've also got $5,000 from the state government.
Correct.
Stamp duties.
Yep, stamp. Not
free,
no, mortgage insurance.
Oh, mortgage insurance. Yeah.
So under the first home loan deposit scheme.
Yep.
So you've got to be careful there because there's only 10,000 places issued as of this month, and they're going very rapidly. Where someone who normally would have less than a 20% deposit, so they'd be in mortgage insurance territory, now the government will pay that mortgage insurance, so zero mortgage insurance, which I had a client yesterday, a young couple who got into a property and we got them approved. $7,000 they saved in mortgage insurance, and another one last week where we saved $11,000 in mortgage insurance. So it doesn't have to be a brand new property that now to get all these advantages. It can be an established property. And there are advantages out there. There's many things the governments are offering under these schemes.
They're trying to keep the economy stimulated, which is really a good thing, and it's needed. We're really blessed up here in the north because, dare I say, we're COVID-free, and I hope it stays that way. But it's great to see these stimulus packages there. So just recapping that, the $25,000 federal grant for
That's for building. For building.
A new property?
So it's a new property, yep.
$5,000 from the state government.
That's for building as well.
That's right. And the $15,000 first home
buyers. And you can have both. So that's from the federal government.
Yeah.
And you can have both, all three of them working together. So you could have $45,000 working for you there. Another example of a client I had recently where we've got the $45,000 in grants, plus there's the stamp duty, not stamp duty, the mortgage insurance saving. So $52,000 overall in benefits for that one client.
That is incredible. $52,000 savings for a first home buyer. So especially here in somewhere like Townsville where the average price is around $320,000, if you're buying a renovator in the 200s, and you're going to spend $125 on it, you get 52 off that.
No, that wouldn't work under those circumstances.
Okay, all right. Well,
no, this is just for building a brand new property.
Talk to the expert.
Yeah.
But that's great.
Yeah.
I mean, it's still big incentives out there. Big incentives there. All right, people. I think that's some really, really great information. I'd like to thank Grandma's today. That's where we are, as you can tell. The team are all working away in the background here, as I keep saying. Great to see things open again. Coffee at 10 with Glenn. I'll be back next week, and I'll also be back next Friday with Mr. Craig Whaley. Have a great weekend, everyone. Thanks, Craig.
Thanks, everybody. Bye.